future trends, deep insights, industry leaders. This is the iGaming Next podcast with your host, Pierre Lindh.
We're back, Nico. We're back for rapid fire news. How are you doing, my friend?
I'm good. Rapid fire news has finally become a weekly podcast, which is great. And I'm just really looking forward to meet and greet you live and in person during Sigma. It's great getting the overall industry back together in one place, and it's thrilling times.
Yes, absolutely. Fantastic, actually. So what Nico mentioned here, Sigma next week, one of the major conferences in our industry. Much of the industry is coming to Malta, and really excited to see you, Nico, of course, and excited to see the industry, to update ourselves for the latest and greatest. And I think that when we record this the next time, we'll have a lot more interesting news, obviously, after meeting the industry and kind of learning of what's to come in this industry in general. So I'm looking forward to see you as well, Nico.
Perfect.
Awesome. So we have some really exciting stuff in front of us today.
Oh yes.
I mean, it's like every week we say the same, Nico. It's like this industry never sleeps, and regardless of what industry you are from, these updates in this industry is always going to be enjoyable, I think, because it's such a dynamic industry. There's so much changing from quarter to quarter, and it never stands still, and that's why I think we've been in this industry for this long, that it's the constant changing, the constant being on the edge, and so on and so forth. So what do you think, Nico? What do we have in front of us today?
So first of all, it's New York. Licenses being given out in New York, or not yet issued, but for sure we know the 9 names of who will finally get the license. Then we will for sure speak about Desen and their approach to bridge the gap in between just a streaming platform and setting up their sports betting entity as well. Then we have the offer of a Gopher to acquire the British-based Playtech, and for sure we must speak about the DraftKings report as well. So as you already mentioned, we are in a quite vibrant industry, but this week is just big times, as the numbers we're seeing and the estimates, which are the underlying baseline for the overall news, it's just huge. Usually it's double-digit billions within these news, and usually it's we're just talking about a unicorn, which is also great. But this time it's like double-digit billions, and this is just reflecting how crazy last week actually is from a number perspective. Of course.
Exactly, and to put this in perspective, I mean, to take a helicopter view here of what we're talking about today, is like we have some potentially paradigm-shifting moves from. You call it Desen. I say Desen. I don't know what is the right pronunciation, but Desen, the streaming service here, of course. So potentially completely paradigm-shifting ideas coming from that side of the fence, and at the same time, we have DraftKings in front of us with a quarterly report that alludes to a massive gamble as we move forward into the future. This can really go either of 2 directions, and there's a really strong bull case to be made for DraftKings, but there's also a really strong bear case to be made for the company as well. And this is just what is fueling the industry right now. There's like a race for the top spot that is fueled by this for this predicted massive growth in the US market that is just completely changing the entire industry. And the most innovative companies is going to come out on top here. But shall we go through this one by one, Nico? Where do you want to start?
Yeah, start with New York. New York and the 1 billion GGR state, estimated GGR state. So what the New York Gaming Commission has done by beginning of this week on a Monday, the 8th of November, they announced the winning bids. So in the end, they had two consortiums, and I'm pretty sure you will just walk us a little bit to what the consortium actually means. In the end, the winning bids have been initiated by FanDuel, DraftKings, BetMGM, BellyBet, who are on the one consortium, and the other ones is Caesars Sportsbook, PointsBet, Resorts World, Rush Interactive, and WinBet. At the meeting held on this Monday, the New York Gaming Commission agreed on a 51% gross revenue tax rate for all participants, and all operators will have to pay a $25 million fee for the 10-year licenses, which means out of a sudden, New York's Gaming Commission just got $225 million. So it's, as said, can you just walk us a little bit through the overall meaning of a consortium?
Yes, absolutely. I mean, I think it's also interesting to mention who didn't get a license in New York. And it's quite interesting. I mean, of the ones who did apply for a license, it was Bet365, FoxBet, TheScoreBet, Barstool, and Fanatics. Barstool and Fanatics belongs to Penn National Gaming, who were not granted a license, essentially. And then we have others like Kindred, for example, who did not even apply because the tax rate is just so high, right? 51% tax. It's unheard of, more or less, these type of tax rates. Now, you mentioned the consortiums here. So essentially what happened in New York is very interesting. New York State and their governor, the previous governor, Andrew Cuomo, was always quite conservative when it came to allowing sports betting in New York State. And he was not very eager to let this pass in general. However, due to the pandemic, it brought a need to increase tax revenue for New York. And this is basically why the state decided to allow sports betting, purely from a tax revenue point of view. And so essentially what they were looking to do is find a solution where they can maximize the tax revenue. That's all that the regulator and the state was looking for. And so they went on to market and they say, they went to the operators saying that you can apply to us and suggest which tax rates you want to give us, essentially. And rather than all the operators doing this on an individual basis, there were two consortiums that formed, one led by FanDuel and the other one led by Kambi. And essentially the consortium that was led by FanDuel, they proposed together a 51% tax rate. And the second consortium that was led by Kambi, they suggested and proposed that they would commit to a 64% tax rate, right? So the legislator in New York, they had two options. Either they take one of the consortiums and they accept it, which is the Kambi consortium of operators. And these four operators would essentially pay 64% tax. Or number two, it would be that they allow both of the consortiums to a harmonized tax rate of 51%. And so the regulator were debating which of the two solutions would generate most tax. And they decided that better to allow the 10 applicants rather than 4 and set a lower tax rate, basically at 51%. Well, lower in quotation marks, right? So this is what happened in New York State. So this is the basis for these 10 applications being granted. I don't know if you want to say like congratulations within quotation marks to these operators, because the second question is, of course, will they be able to turn a profit with these tax rates? Are these tax rates set in stone? I spoke to our good friend Chris Grove here in a podcast the other day, which is going to be released on Monday. And Chris Grove is an excellent investor, very deep into US sports betting and iGaming overall. And he said that, you know, the chapter is not closed on this regulation, yet he expects that there will be lobbying in New York for potential tax credits and so on, at least for operators wanting to offer free bets and bonuses. So in other words, if you offer a free bet, you shouldn't tax on that free bet, which is currently the case. And so they're still a bit up in the air how this regulation will continue to evolve. But for the moment, it's obviously a question mark how you can turn profit in New York State and with this extremely high tax rate, considering that the operators are not yet profitable in other states with lower tax rates as well.
Yeah, and the overall meaning of a consortium, you know, why do you actually line up? It's a pretty much, you know, we have this in you know, the history of economics as well. It's called the prisoner's dilemma, right? It's pretty simple, and we can just see how it actually works. It's the same for OPEC as well, right? Because if one member state of the OPEC would actually just lower the price, of course, all the other ones would need to lower the price as well. And that's why they actually line up, becoming one consortium. So they just agree on a price and everybody literally follows the same price. And this is just another example how a prisoner's dilemma, just a theoretical, you know, kind of approach, which, you know, from you know, universities, actually works in real life. And that's why if any of the CAMBI member groups, you know, they wanted to go for 64 tax rate. But of course, even the state of New York, the New York Gaming Commission, has a high interest to, you know, open the market for more than just 4 operators. And that's why they accepted also the 51 tax rate on gross revenue. But just to walk us a little bit towards the market size as well, and to put it in perspective, because as of now, you know, it's quite common to just speak about big numbers and everybody just accepts the big numbers and the overall estimate. In the end, I don't follow the overall hype on the US market, because as soon as you just put the overall numbers a little bit into perspective, then you know, a miracle must happen to actually get all these numbers in line. Or as we just talked about yesterday during our Clubhouse session, I think Robert came up with this quote. He also doesn't see all the numbers coming. So the estimated numbers are $500 million revenue for the operators. So $500 million in taxes for the state of New York as well. It's pretty simple, which leads to an overall taxable income, which is the GGR, of $1 billion per year. I'm pretty sure they are estimating this $1 billion GGR happening in 2025. It's all good, but now the fun starts. How do you actually come from a GGR rate to handling? Handling is all the bets the operators actually process, right? Usually you calculate GGR to handling 10 times, right? So 90% of the handling will be paid to all the winning customers, and 10% of the handling will stay at the operator's end. So it's pretty simple. $1 billion in GGR means $10 billion in handling, which is then the market size. So $10 billion in handling, what does it mean? Pretty simple. It's the overall gambling not just sports bet like in New York, it's overall gambling in the UK and Germany. So if you then just put into perspective, New York is roughly 1/4 of Germany, or roughly 1/5 of the UK. So these 1/4 or 1/5 are making the same GGR, which an overall industry actually does. I just don't see this happening.
And just to clarify, Nico, when you mentioned UK and Germany, you mean do you mean those markets together, or do you mean separately?
Separately, each market separately. So in Germany, the overall handling in the gambling industry is roughly $12 billion. And in the UK, based on the latest numbers, the after COVID numbers, it's also 12 billion euros. But for the overall industry, right?
Exactly. So it's quite interesting, and so basically we're saying that the state only has 1/4 of the people as the UK, for example. And how would it make sense if a state with those numbers would produce the same GDR as the entire UK, in other words, and particularly because obviously UK has a longer history of digitalization on the gambling side, right? There've been online gambling happening within that jurisdiction for 2 decades, more or less, and so it takes time, of course, to build up the liquidity and to change people's habits from scratch.
Exactly. But what, the overall market in the US, first of all, as you already mentioned, it's a paradigm shift, right? So we see that the stigma of being in the gaming industry obviously significantly changes, right? When the both of us entered the industry, and we are like the young kids, right? We are the young kids. I don't know, when you entered the industry 10 or 12 years ago?
Even longer. It's like 17 years ago, even.
Or 17 years ago. But you're still a young kid if you just remember, back in the days, people are being in the industry for 35 or 40 years, when all the gambling industry literally happened, in the backyards of shady places or whatever. As of now, especially based on what is happening in the US, the overall gaming industry and the perception of being in the gaming industry significantly changes based on the daily fantasy sports, DFS, which FanDuels and the DraftKings actually are responsible for, which is a good thing. And they are paving the way even for other business. And maybe we just have a little bit of time. Disney as being one of the, childhood memories of all of us, they are still looking into the sports betting business as well. As we already discussed by beginning of October, now there's news spreading around that they are still looking aggressively, eyeing on the sports betting industry. And last week, we also have seen Desen buying into the sports betting industry as well, with the acquisition of the Tel Aviv-based Texel. So they are specifically diversifying their portfolio. They're adding another vertical into their overall food chain. And this is just based on, the expectations which they see in the sports betting industry. So do you mind if we just jump in a little bit into the DAZN topic as well? Can you just walk us a little bit to the Texel acquisition?
Yes, and the Desen, I don't know what is the correct one here, but in
whatever you like.
DAZN, yeah, Desen. In any case, and we've been talking about this so much since the beginning of this year, and we predicted it. We called it, Nico. I mean, we spoke about this very early in the year, that there will be a paradigm shift for these sports betting. For the sports streaming networks like Desen, ESPN Plus, and so on, where it makes so much sense to integrate sports betting into these streaming networks, because you'll get a completely new demographic of players who aren't necessarily these hardcore sport bettors. To create an account at Bet365, you log into that site, you're met with an advanced spreadsheet, more or less. And to be able to place a bet, you really have to have purpose. Whereas a streaming network like Desen, they will have the mainstream as their user base, and they aren't necessarily looking to place a bet. But if they are presented with the option to do so in a really UX UI friendly way, all of a sudden you can go from having 4% or 3% of the population placing a sports bet to maybe 30 or 40% of an entire nation's population placing a sports bet, as they are intuitively offered to do so. The friction is always the worst enemy to do commerce in any situation. To sign up for an account on Facebook or to deposit money into your wallet, whatever it may be, friction is always the biggest competitor, if you will. Like the more friction there is, the less business you will do, even if you have a potential users who would conduct that, who would take that decision if they could do it simply, right? So as you mentioned here, Nico, they Desen have completed an acquisition of Texel, Israeli based company, and they have now released a press release that not only are they going to take their streaming platform to the next level and offer sports betting, but they are taking it further. They are saying, Desen, now that their platform will become not only a streaming platform, not only a sports betting platform, but it will become a social platform as well. It will become a platform where you can talk, shop, share, bet and play, and of course stream with a community. So all of a sudden, you go from a service that is a one-way communication, the screen is talking to you, into a two-way communication where you can also talk back to the community in that platform. And so they are creating a community with various services within Desen. And this goes to the wider, I think, trend in tech in general, is that as we go into the future, creating a community is what's going to define the winners for a lot of organizations. And if you can create a loyal community around your brand, you'll have a customer database that will be there forever. And we've seen some success of this in the past, where organizations like Tesla, for example, have like a hardcore community and hardcore support is around them. Apple, of course, and other brands as well. And it seems that now, as we go into the future, many brands will try to create this loyalty from the customers, and creating a community is definitely the way to do that. So it's very interesting, and we've been again, to go full circle here, we've been predicting the sports betting to be integrated into the Desen platform, and now obviously ESPN is looking to do the same through Disney. But what is even more interesting here is, again, this integration of a community where you can talk, shop, share, and stream, of course. So it will be really interesting to see what Desen will be coming up with here as they launch this product. What do you think, Nico?
Yeah, so first of all, if you just think about where Desen or DAZN actually comes from, it's it has been, I'm pretty sure, their first D2C product, because back in the days, the Perform Group actually owning Desen just had been a B2B supplier, providing stats, streaming rights, footage of, sports events taking place. So by actually providing their content direct to the consumer with their streaming platform, they finally became or launch a product which is available for direct customers, the consumers. And as of now, they are just seeing, or they estimated how big the customer base actually is. And entering the sports betting vertical, in the end, as you mentioned, this doesn't come out of nowhere. You don't onboard Ian Turnbull, also well known in our industry, if you don't specifically eye for the sports betting industry as well, right? In the end, if you now just offer sports betting as well, put this to your portfolio, you cover the overall food chain of a customer and their interest. And as you already said it, it's more pleasant for a customer to actually know, okay, I'm watching the Canelo versus Porter fight. Why should I actually log into my Bet365, BetMGM account if I can easily, with just one more click, place a $10 bet on the fight? I will actually see in the end, and this is where, the overall food chain literally tackles the customer. You specifically know what your customer is doing. You can specifically already prepare a bet slip where the customer just needs to enter the stake and needs to decide which side the customer actually is on, right? Either it's Canelo, like Dana White putting a 100K bet on Canelo winning the fight by TKO, or on the Porter side. And this is literally bridging the gap, which all the media companies already tried back in the 2000X days, like Eurosports. You've seen this with Sky and their Sky Sports Bets approach as well. And now, if you already have the media rights, it's just one more vertical, and you can cover the overall food chain of what your customers are actually interested in. Right, and this will be a game changer as well. And as we can already see, even the big leagues, the big sports leagues like the NBA, the NFL, the NHL, they are signing exclusive media right deals with company. Maybe it's Sportradar or it's ESPN Plus, who is exclusively owning the Monday night game, etc. So the next deal they will be setting up with these media powerhouses is that they are also able to actually exclusively offer bets as well. And then it's only, and literally only, their obligation, not obligation in a negative way, but they are the only ones offering these kinds of bets. And if you're watching the Monday Night Football game and you're just able to place a bet using the Mickey Mouse bet or ESPN Plus bet approach, then the overall revenue will stay on their end. And as we can see from the estimated numbers from New York, they are dealing or estimating big numbers. And that's why especially all the media powerhouses are looking for another vertical which their customers are specifically looking for. And also the Disney CEO specifically, back in September, when he already announced during an investors call that they are aggressively eyeing or approaching the sports betting industry, this fact did not change. So as of now, like the Forbes, the Reuters, etc., are picking up that story, which has the origin already back in September. But for sure, we will see something in the short run. I don't know if this will already happen just before Super Bowl, which is just big time betting in the US. But for sure, within the next year, we will see another change in the overall sports betting landscape as well. And what does this actually mean for the existing companies like the Bet365? In the end, they are buying the media rights from the Perform Group, from the Sport Radar, etc. As soon as ESPN Plus and the Perform Group, the Zone, Desen, actually, they stop offering live footage of a football match or a basketball match to Bet365. Revenue's gone. And revenue will touch down at the end who actually offers the media right. And this, I don't know what Denise is eyeing on and on the Bet365 end, but for sure, this is a change which will happen within the next 2 or 3 years, and the overall landscape will change for sure.
Yeah, the change is happening quicker, and this is the paradigm shift. It's the fact that these organizations are coming in from a completely different angle. It's not the traditional sign up an account and they will do sports betting. It's like step 1, sign up account. Step 2, they'll do sports betting, and this is the only thing that the organization offers. It is the fact that you'll have companies who are signing up customers for a different purpose, and then sports betting becomes the side product to the masses, and that is the paradigm shift. And just to nail on the point again, to take a step back, and sometimes it's easy to lose the forest for the trees, and if we take a step out and we look at the forest there, and if we say that the forest is now the tech industry, it's the trend is clear as day. I mean, all these traditional subscription streaming services like Spotify, like Netflix, ESPN Plus, now Desen, of course, they traditionally launched with a very singular focus. So Spotify to offer music, Netflix to offer series and movies behind their paywall, ESPN Plus to offer sports. Okay, and what's happening now is that they are realizing that rather than offering a singular product, why don't we introduce other products within the same subscription service in order to increase revenue, of course, but also to offer more value to the customers, right? So Netflix announced here the other week that they are expanding their portfolio and introducing video gaming, right? So within Netflix, you'll be able to watch movies, series, and now play video games, right? Behind one subscription. Of course, ESPN Plus here now toying, of course, with sports betting as well. Desen creating a community. And again, it just goes in line with removing friction, because that is the enemy to commerce. Friction is the enemy to commerce. So these subscription services have a massive power to introduce more services behind a simplistic subscription model, right? And I think my prediction is that the major media houses now that have a successful subscription model, they will be the new powerhouses on the internet as we go forward. It will be all about which subscription services you are behind. We are moving away from this Web 2 situation where it was all about free services in exchange for your data, right? Facebook doesn't charge anything, but they want your data so that they can target so that they can give you advertisements that is relevant for you. This is Web 2, and Web 2 was dominated by these organizations like the Facebook, like Google, for example. And now we're moving into Web 3, which is a more kind of decentralized future. But what this will also mean, not only for the decentralized future and the introduction of blockchain-based services as we go forward, is these subscription models that are now taking over. I've been on the internet long enough to remember that these subscription services are quite new phenomena. And it seems intuitive and straightforward for us to sign up for a subscription now. That was not the case 10 years ago. to sign up for a subscription was very far-fetched 10 years ago, because then we had just gotten used to the fact that everything is for free on the internet, like the Facebook are free, Google is free, Google Maps, all these incredible services are free. But of course, what's happening now is this next paradigm shift where people are more are acknowledging that their own privacy, for example, and they are willing to sign up for a subscription fee in order to not have advertisement, and even increase the amount of value that they get out from the services and put more demand for them. So I think the general tech trend is clear as day, and again, that is where the paradigm shift will happen to our industry as well. And yep, who knows what will happen to Bet365? Maybe they will be left behind, or maybe they are looking to expand their own product catalog in order to catch up with this trend. But Diane Coates and the group over Bet365, I'm sure they have a lot to think about at the moment.
Yeah, especially in a strategic way. As of now, Bet365 is a well-deserved tier 1 operator. Right, they are doing a great job. Always have done a great job especially when they decided to, leave the retail business, which they have been, quite successful in a way smaller way, but successful. And Denise sold the overall business and said, the next big thing is the internet. It's online sports betting, and each and everyone was like, "Hey, girl, you're mad." Right, 20 years ago, they're pretty simple, right? But she just stick to her plan, and she obviously succeeded. But sometimes it takes this kind of madness to see something coming, and then to succeed. And as of now, I'm pretty sure, as I know some of the guys in Bet365, these are smart guys, right? And thinking ahead within the next 3 to 5 years. I'm pretty sure they will come up with some big things, as for sure they also have deep pockets as well, right? And
either they come up with something big, but these media companies have massive resources. I mean, imagine going head to head with Disney. Like it's not going to be a fun journey, but or they are setting themselves up on a journey where they'll be acquired eventually. If our humble predictions turns true here, but I think it's becoming clear. The trend is clear. It's already out there. It's announced. Desen is taking this step. Disney is taking this step. These are now the competitors for Bet365. They should not worry about William Hill. That is not who they are fighting for anymore. They are fighting for Disney now.
Exactly. And in the end, what's the interesting fact is, as soon as the overall gaming industry started, the underlying product didn't change. It's always a sports event. But as of now, the big leagues ain't no more speaking. So first of all, they have just been speaking to the media powerhouses, right? This is where the big money came from back in the days. Then out of a sudden, and this is why especially during the COVID-19 days, when every sports league had to shut down. And then out of a sudden in Germany, if I'm not wrong, in April or May last year, May this year, we started again offering the Bundesliga. Why has Sky been able to actually launch the Bundesliga again? Because the overall sports betting industry is earning a lot of money, and they are buying the advertisement spots to being named all around the Bundesliga broadcast, etc. Right? And so paradigm shift from dealing with media houses. Now the sports betting industry is literally, telling what price they're actually, willing to pay. And with the media houses becoming sports betting operators as well, the overall shift from who's in charge and who dictates what will change once again, but the underlying product doesn't change, and this is what's also quite interesting, how the NFL and the NBA or the UEFA will set up their own sports league and how they will, slice and dice the contracts they are doing with the media houses. Will they also sell the product to the sports betting companies as well? And one thing is for sure, buying the media rights will never get cheaper again.
That's definitely true. I mean, there's a war happening on that front between the streaming platforms, of course, like you were saying, and Amazon is in this mix now as well. I mean, they have unlimited funds, like unlimited. They can buy up sports media rights around the globe, and it costs billions of dollars, just to test the market a bit, and they might aim for profitability in 10 years. I mean, it's a war happening on this front as well, and again, this could again have a detrimental impact on the traditional operators, then, if you will, if they are not able to offer. If they'll have competitors that are so much better positioned than they are to stream these games, basically. But I think we'll definitely follow up on this, Nico, in general, and this is something to keep both eyes really pierced into right now, because this is happening, and it's happening quick.
And one thing we already see is, listed companies, as soon as they need to present their quarterly reports, right? So DraftKings Q3 report, right?
Yes.
Revenue and losses both continue to grow in Q3. This is one of the outbursts you already see, as costs are significantly higher than, as of now, revenues can be. So DraftKings reported Friday last week, I'm pretty sure it's the 5th of November, they reported a net loss for Q3 of $545 million. At the same quarter in 2020, they had a loss of roughly $400 million. And the revenue, which is literally taking the other part, the revenue has gone up to $213 million, which is an increase to 60% of last year revenue. But so far, just in 2021, DraftKings has reported a net loss of $1.2 billion. And there's still the Q4 outstanding, right? So what we can see is, first of all, revenues and, paving the way for your upcoming business is a long time goal, which they're all literally in the race for. But as of now, DraftKings is just bleeding money. They are bleeding money. If you're capable of dealing with a 1.2 billion loss, your pockets are quite deep. Your pockets are quite deep. And this just gives an estimate. Although they are reporting this kind of big time loss, the investors still believe in the overall market and the position which DraftKings has actually gained, especially in the US. And as soon as numbers from New York are flying in, Illinois numbers are flying in, California is based on the 2 ballots which are now up and running. So for sure, in the long game, in the revenue game, they will at some point see, hopefully, and fingers crossed, a turnaround. But as of now, it's either go big and fight for everything you can get, for all the media rights, for all the licenses which are out there, or fail. There's no in between. And DraftKings and the numbers of DraftKings, which have just been reported, is indicating this kind of perception. What's your take on the overall DraftKings numbers?
Yeah, I think we're in the gambling industry, and I think people who are invested into DKNG is well aware that this can probably go either of two directions, because obviously they are making this massive amount of losses, but the investors are hoping that in the future this will turn into massive profits. Now, it's a high risk investment, of course. I think everyone is aware of that. I like to. I just finished the book today called Power Play, which is the history of Tesla and Elon Musk, like how from Tesla's inception to where it is today. And it just made me think that DraftKings is kind of the Tesla of the iGaming industry, because they seemingly are racking up these incredible losses. They are investing super hard in order to at some point in the future create more or less a new market and create a profitability in the organization in a product that is not proven yet in this particular market, which is the US. And what is interesting with Tesla is that Tesla was famous in the 2010s for being shorted by investors. Investors didn't believe that a new car company could build itself up from scratch and actually become consistently profitable, and not only consistently profitable, but to actually become a mainstream supplier of cars, because obviously other car makers have been perfecting their manufacturing for 100 years, and they are on still razor thin margins. And so they were, they came in from sideways, and they tried to do something differently, and they were really close to failing many times. Tesla, of course, famously in 2017-18 with the production of the Model 3 and the struggles they had to automate the process, nearly killed the entire company. But that was not the only time Tesla nearly failed. It was many times before that as well, where Tesla was close to bankruptcy and saving themselves in the last second. And I think DraftKings is on a similar journey here. They are in the unknown, and God knows what's going to happen. The share price has been fluctuating widely because, how do you even evaluate the company? It's really difficult to evaluate DraftKings, right? Like, they are racking up larger and larger losses. However, they are increasing the top line at the same time. And Jason Robbins, the CEO, he's expecting profitability within 2 or 3 years, he mentioned in the investor call. But still, we are treading uncharted territory. And look at New York now, for example, that we discussed. 51% tax rate. Okay, other big states, the expectations are the other 3 big states: California, Texas, Florida. The assumption is that these states will open up, but does that mean that they will open up on the operators' terms? Probably not, after looking at what the New York legislature is doing, right? Other states will obviously look at New York and potentially launch their state's legislation with equally high tax rates, or maybe higher. Who knows? And so much of the success in DraftKings will be outside of their own control and inside of the control of the legislator. Now, to make a final point here as well, an argument that was made by Chris Grove here that we quoted earlier, who is an expert on the US market, he would say, if you would make a bull case for DraftKings, you can easily criticize them for the product offering that they have today. But what DraftKings are trying to do is, again, they are not, if we go forward in a couple of years into the future, they might not be a strict gambling company. They might launch other services that are targeting the same user database. So, for example, they have already launched an NFT marketplace. NFT cryptosphere is very similar in demographics to the online sports betting world, heavily leaning male and a particular age, and so on and so forth. And so it seems that DraftKings is banking on the fact that they will introduce new verticals into the company, like the NFT marketplace and potentially other verticals as well that that are targeting the same market group. And if you look at it from that perspective, that we are only, maybe DraftKings only have one vertical today, but they might have 4 in a couple of years, then all of a sudden this heavy investment into creating this user database, building that household brand, all of a sudden it makes more sense. But again, it's also very risky because again, we are banking on services that haven't even been invented yet.
True. And if you just have a look at the numbers, first of all, it's always a quite of interesting talk if you're speaking to investors, why they should actually believe in your product. In the end, DraftKings, they already have 2 verticals, starting with the daily fantasy sports and now with the sports betting, right? Yeah. First of all, you have to spend money to earn money in the long run, right? And if you just take a look at how long it actually took DraftKings to acquire 100,000 first-time depositors in days. This number has gone down significantly. Back in the days, 1 or 2 years ago, when Pennsylvania and Indiana opened up, it took them 344 days and 312 days to acquire 100,000 first-time depositors. Pretty simple. Arizona launched by the 9th of September. It took them 17 days. 17 days to acquire 100,000 first-time depositors. Just imagine those 100,000 first-time depositor number from the state of New York. People living in New York are quite familiar, with the DraftKings FanDuel, the daily fantasy sports. As of now, it's just one more click, and then they can just deposit money on their sports betting end as well. So I'm pretty sure, as long as DraftKings doesn't run out of money, they don't dry out, I'm pretty sure they will succeed. But for sure, New York has to open up for the Super Bowl, the upcoming Super Bowl in 2022. And that's why especially also the New York Gaming Commission has been pushing so hard to actually make this happen, as each and every of these 9 winners is specifically eyeing for the Super Bowl. And then for sure, we will see if the overall bet on the DraftKings will turn out successfully, and everybody is like, yeah, I should have invested in XYZ. It has been a low brainer. Ex post. So today's decision, from a today perspective, all the decisions we made 2 years ago, some of them have been right, some of them have failed, but from a today perspective, I am pretty sure I could guess all the outcoming of the last Bundesliga match day with ease, right? With ease. But from a today perspective, looking towards the future, of course, you always have a certain uncertainty. And I'm pretty sure, although the stakes are high on the DraftKings bet, like the stakes have been high on the Tesla bet as well, and they have been competing with real heavyweights. An established industry, automotive, has always happened in a particular way. Each and everyone going for the gasoline. Then you have all the petrol heads just deeming for the well-established car manufacturers. You have the oil industry backing, of course, the automotive industry as well. And then there's this one maniac from India and South Africa, settling down in California, comes around the corner and, declares war to the automotive industry. Of course, each and everyone stated, okay, you are about to fail. Friends of mine, they're working in the automotive industry, and they have said pretty much the same. They were like, okay, how can one maniac who has no expertise in automotive, how to manufacture a company, how to manufacture a car, eventually take over the show? In the end, he did.
Exactly. And now Tesla is valued more than all the other public car companies combined. Interesting. So maybe we'll see the same. Maybe we'll see the same with DraftKings here eventually.
Yeah, maybe we will see. Maybe we will see. And one more thing. M&A side, to just cover one thing on the M&A side. We are seeing that Playtech, who is also, for sure aiming and on the mission to being sold for a decent amount of money within the billions. They are just in talks with one of their existing shareholders, the Hong Kong-based private equity company Gopher. So, yes. Can you just walk us a little bit through this one as well?
Yes, and when you say this, Nico, it's quite interesting because if you might remember here just a couple of weeks ago, Playtech was going to be acquired by Aristocrat, and they had agreed to that deal, right? So a couple of weeks ago, there was a bid from Aristocrat, which is primarily a land-based slot producer who wanted to acquire Playtech for £2.7 billion. And Playtech agreed, but there's a consideration there. And in the meantime, now Gopher, which is the second largest shareholder in Playtech, announced that they also want to acquire Playtech. And they have made a bid to do so. The bid is undisclosed, so not yet public. And obviously Gopher and Playtech have a close relationship here previously, because not only is Gopher the second largest shareholder, but they have also done M&A activity together here earlier in this year, where Gopher made an acquisition of Finalto, which was a product owned by Playtech. And interestingly enough here as well, we spoke to Todd Hasshalter of Evolution here a couple of weeks ago, and he called it. He said he thought there was going to be a second bid for Playtech because the share was traded higher than the bid of Aristocrat, and he thought that this meant that some shareholders had gotten the wind of a potential second bid that was imminent, and he was right. He called it, and now the other day Gopher was announced here. So basically, there's two contenders in the run here to acquire Playtech. If I was told Evolution, I would very much hope that Gopher is gonna win this war, of course, because Aristocrat has a very strong position in the US market, where Evolution is currently enjoying a monopoly. And so the expectation is if Aristocrat would acquire Playtech, they'll potentially be a serious contender now to Evolution. Playtech have tried to establish a foothold for a long time in the US, but so far they haven't been able to do so. But obviously they are working on that, and in the coming quarters we'll see Playtech enter in that market as well. But it could be accelerated massively together with Aristocrat, and that's the danger for Evolution then, for example. So yeah, those are some two quick sense. What do you think, Nico?
Yeah, interesting. And although the overall numbers are not yet disclosed, based on, people working or having insights from Reuters, they are estimating that the overall deal size will be roughly around £3 billion, which is 3.5 billion euros. So which is a little bit more than the anticipated Aristocrat offer. But, this is how you can sometimes just, see things probably happening, like Todd obviously did when he just eyed on the overall stock market, when you have the bid and ask price, etc. So he obviously smelled something, and this kind of smell turned out to be a pretty solid statement. Yes. And for sure, we will see a big-time acquisition either by Aristocrat or by Gopher. But as Gopher is already on the owner's line of Playtech, as they are holding nearly 5% of the overall stock, or the overall stake in Playtech, for sure we will see something happening on this end as well.
Absolutely. That's brilliant, Nico. What an hour ahead together again. I feel completely updated of the industry now. And like we were saying here in the beginning, there's never a dull moment in this industry. Always interesting movements, and it's the time to really pay attention now, because the overall trend, the underlying trends, are heading in very interesting directions at the moment. And I think that the winners and losers of the future are definitely being defined right now.
Yeah.
I think so. What do you think, Nico? Shall we close things off for today, and then we'll focus now on Malta, on Sigma next week, and then we'll get back stronger than ever?
Yeah, we will. And one thing which always amazes me is that some things you just see or read in between lines actually turn out to become reality 3 or 6 months afterwards. So as said, we discussed the Disney approach already pretty much 1.5 months ago, and it now continues. The Zone, or Desen, we discussed this nearly 2.5 months ago, right? And we just see that things just turn out to become reality, and this is just amazing.
Absolutely, it is. And as a final thing, we have to find out for the next update how we pronounce Desen or the Zone. That's our mission for next time.
Okay, we will do so.
All right, Nico. It's been fantastic to spend this hour with you. What do you say, Nico? Shall we go down to the beach and we'll have a pina colada?
Yes, we will. We'll be joining you next week, Friday.
Perfect. All right. Take care of yourself, Nico. Have a good weekend, and I'll see you next week.
Okay, we will. Bye.
Bye.